It's a great opportunity for us to have Mike here. South African is the market which actually has really made inroads in the banking area so far the actual profession is concerned. And this is a very special session. We have requested Mike to really share with us the areas in which the actuaries have been working in banking area in South Africa. So let's take this opportunity to really understand the areas in which we can really enroll, where we can really explore in banking and where the future opportunities lie for Indian actuarial profession. So I request people standing in the back to please get seated. Thank you. So over to Mike. I think Mike needs no introduction. He's already done another plenary session on this. So Mike, please, over to you.
All right, thank you very much. I don't know the format to follow, so those of you who were here earlier, we did talk about actuaries in banking, and I think we touched on most of the issues that were of interest. So we're just going to expand on that, and I think we also want to have it more a discussion session. So we're also going to ask for questions from the floor. So let's take it from there. We have got slides. I think someone's going to put up slides here. We will decide whether we use the slides or not. Right. Before, I've presented many times on banking in many places, especially at IAA meetings, and the main objective is to raise awareness of the opportunities in banking and to actually showcase that there are actuaries already working in banking. Generally, before I do the presentation, there is a very short note that I prepared. I prepared it some time ago. So I just want to go through it so that we put things into context. As we speak, I'll try and touch on how the Actuarial Society of South Africa came to be among the global leaders in banking practice for actuaries, and how we eventually developed a banking fellowship subject for actuaries. I'm not going to introduce myself again. I'm a fellow of the Actuarial Society of South Africa, and I was heavily involved in the whole process of coming up with the banking subject. But we need to understand what exactly we mean by core banking practice for actuaries. There is investment banking. Most of you would understand investment banking, but that's just one component of core banking practice. There you find many entrepreneurial actuaries who sought opportunities in the investment banking world where complex modeling is involved. You find many other professionals like there are people with MBAs, CFAs, chartered accountants, engineers, and lawyers in the same teams. So usually they are cross-functional teams. However, when we talk of core banking practice for actuaries, we are talking more about the sound management of banking institutions as it relates to managing the multitude of risks that are faced by banks, and how the actuary in banking can assist in that process, working alongside those other professionals. So that's what we talk about. We talk about supervisory activities for the sound management of individual banks and the banking system as a whole. We talk about how the actuary in banking can use their skills to assist in managing systemic risks in the whole financial system. We talk about strategic issues, risk management issues, and governance issues in banking. This is the same way that a life actuary or a general insurance actuary or a healthcare actuary can talk about the sound management of those other institutions. They innovate, design products, price products, set assumptions, develop models, value assets and liabilities using those models, analyze results, interpret those results, make recommendations, and communicate, thereby influencing strategic decisions that may be taken by stakeholders within those institutions. The same applies in banking. The business of a bank is predominantly risk management, from product design to pricing to credit risk measurement and management, to market risk measurement and management, to operational risk measurement and management, to liquidity risk and funding risk management, to the sound governance of banking institutions, and to the setting of strategy for the overall management of banking institutions. All of those activities are complex and interrelated. Actuaries are well trained to deal with complex modeling and problem solving. So we are a natural fit to contribute in the management of banking institutions. As actuaries, we are trained risk managers and problem solvers. We innovate and design solutions within a mainly risk management and problem solving framework. We operate as risk management and problem solving professionals. Just think about the actuarial control cycle and how we apply it. We accept that there is certainly no dominant professional in banking practice among the many professionals working there. However, as actuaries, we hopefully will emerge as one of the dominant professionals in banking practice over time. We can easily overtake other professionals. As we modernize our actuarial qualification to remain relevant, we will learn what other professionals do, we will work with them, we will learn from them, and we will integrate our insights and experience into the skill set of an actuary to be relevant in banking. Through the IAA banking working group that I chair, our main objective is to raise awareness and encourage individual member of associations of the IAA around the world to take a deliberate strategy to accelerate the involvement of actuaries in banking within their jurisdictions. So there are just so many areas where actuaries can add value in banking. And we believe we have the skills. We just need to innovate and apply those skills. So now we can discuss a few of those areas where actuaries are actually involved in banking. But this opening statement is quite important because it does set the scene. To actually show ourselves that actuaries can be relevant in banking. I've been instructed to spend not more than 30 minutes, and we're going to do it. There are slides we're going to skip. The slides will probably spend maybe not more than 10 minutes, and then let's have a discussion from the audience. This slide is the agenda slide. I don't think there's any need to read it. But that's the agenda, that's what we're trying to cover. At the back of your mind, just know that we're just trying to raise awareness and showcase what actuaries can do. This slide, those who were there earlier, understand this slide where we said banking practice has been happening in areas like Australia and South Africa. So it's not a new thing. In South Africa, it's now more than, I think it's about 15 years now. The South African actuaries have already been practicing in banking, and it has expanded. In our earlier session, we indicated that there are about 350 professionals within the banking space in South Africa, and about 60 of them are fellow actuaries, and the rest are student actuaries who are upcoming. We had this slide and we said, as actuaries, there are skills that we know are instilled in us, and I think the actuarial profession has really gone a long way to teach our upcoming students some of the soft skills that actuaries have always been accused of lacking, such as communication. It's usually said that actuaries were probably not the best communicators around. But over the past years, a lot of these issues have been addressed. But these are exactly the skills that are needed in any environment that an actuary works in, especially in banking. And most importantly, within a banking space, you need to understand the business of a bank. So you need to understand the business model of a bank, how a bank makes its money, how a bank can easily lose the money, how a bank is measured in terms of performance. You can only understand those things if you really get into the business and start digging down. So we need to be applying these skills that I've put up on the slide. As actuaries. And that's what South African actuaries and Australian actuaries, most of them, if you meet them at an individual level, have been doing. Just a reminder that we have had some old areas of actuarial practice and other new areas emerging. For example, we have enterprise risk management, and that's the one I'm just going to touch on right now. This is very closely related to the work that happens in banking. So when we had the CIRA qualification, being certified as international through the IFOA and SOA, and I think South Africa also had that qualification. We saw a lot of similarities. While CIRA, the syllabus does cover a wide range of issues in a wide range of industries, we found the work being very relevant to banking, which led us to use that subject as a base to develop the banking subject that South Africa ended up developing. This slide, just talking about the functions of a bank, and by understanding functions of a bank, especially the lending aspect of it, where then risks arise, then you're going to understand the areas in which actuaries can be found. But we're not going to spend too much time on it. Then I don't think our discussion will be complete without understanding that this is a constantly evolving environment. Banking is a constantly evolving environment. A lot of things have been happening, and in fact, most of the work actuaries are doing were regulatory driven. They were mainly regulatory driven, and all those changes, they were coming through, like with Basel II, then you have got Basel III that then came. Right now we have got IFRS 9. All of that led to a lot of areas in complex modeling that's required where actuaries started getting involved. Fintech is a good example where even the Basel Committee even issued a paper to discuss how fintechs are going to disrupt the traditional banking models and how the regulators are going to tackle the issues that arise. So we need to be cognizant of those challenges. Now, this is the slide that Sanil wanted us to spend more time on, which discusses the different areas that actuaries get involved in. So in South Africa, so I'm going to have to look at this slide. So in South Africa, you find that actuaries are involved in product development. And they use a lot of actuarial and statistical insights. There is innovation that happens. New funding products are designed. There is a particular bank in South Africa called First National Bank. It's one of the top 4. It does employ actuaries a lot in the product development space. And then in credit risk modeling and scorecard development, especially in the retail space, you find a lot of actuaries being involved in those areas as well. In fact, that bank, First National Bank, in most of the credit heads or heads of credit departments within the bank are actuaries, fellows, and associates and students. Customer analytics and value management is one of those interesting one where data analytics is becoming very, very critical and useful within the banking space because normally you want to understand the customer lifetime value, so you actually do all those calculations by analyzing all the information that you have about a particular customer. And this work is being performed by actuary within the South African context. Then you have got trading and pricing of derivatives. This is very old. A lot of actuaries have been involved over time in this space. Then you have got risk management in general. So we need to understand the risks that are experienced by a bank. I already mentioned credit risk, but then you have got market risk. Under market risk, you have got currency risks, you have got interest rate risks, you've got risks of falls in market value of assets. Then you have got operational risk. Then you have got liquidity risk. Liquidity are normally combined with funding because the bank survives on having sufficient liquidity and they must have appropriate funding for the funding of their business. All those risks are managed and they are normally, the work is normally undertaken under a central function. And then you have got balance sheet management and provisioning. That work is closely related. Balance sheet management is closely related to asset liability management and group risk management. And then provisioning is closely related to credit risk. That's where we talk of IFRS 9 that came into effect on 1 January 2018. That's part of the work that I actually do currently. So IFRS 9 effectively having forward-looking expected credit losses, there's a lot of modeling that happens there. We have actually had to build models from scratch, even in Excel, and come up with provisions for banks. Capital management, reporting, corporate development, that's capital management. Actually, you actually have a lot of actuaries in capital management, closely related to liquidity risk and funding. Then there is reporting that's normally required by the bank, usually regulatory reporting. When you talk of corporate development, that's really other areas such as strategy, and sometimes even mergers and acquisitions. You do find actuaries in those areas. So this slide is a busy slide. Because we have limited time, what I'm going to do is I'll refer you to the IAA website. When you go to the IAA website, go and look for the Banking Working Group page on the IAA website. We developed a comprehensive report with some attachments that we put there that talk about all the different areas where actuaries are involved in banking and where actuaries can still be involved in banking. You can't even exhaust it. And normally I compare with the traditional area of pensions. Pensions, I worked in the UK at some point where we were doing complex defined benefit valuations. And it was exciting, interesting work, working with very large pension funds. I moved from the UK and I went to South Africa. In South Africa, the work had changed because there was pressure in the early 80s of pension funds moving from defined benefit at the time to defined contribution. I found myself adding numbers, taking a member's fund credit, opening fund credit, you add the contributions during the year and some interest rate investment return, you get an end balance. And that is the work I was now doing as an actuary, from moving from complex defined benefit valuations. For me, because I qualified as a pensions actuary, when I moved into banking, I found the banking work really, really more exciting and more challenging. And we found that in South Africa, even students who are now writing pensions, you'd find that there are 2 or 3 students in a session, but banking is now taking up 10, 14 students writing the banking exam. So the landscape is changing. It's something we can't ignore. It's something we need to always take into account. Right. This slide, I did describe it, is an example of where you can apply actuarial techniques, insurance and banking, the way you apply Markov chain techniques in the calculations, survival models effectively, so you can effectively compare banking and insurance. So here, where you say probability of claim in insurance, in banking we say probability of default. Where you say sum assured, sum insured, in banking we say exposure at default, which is what is the outstanding loan when that loan defaulted, because that's the exposure to the bank. And then loss incurred or sum insured, we equate it to loss given default. It's the same work. So this is where we say, go into a bank, understand what they do, then innovate. You can actually come up with models. We are now teaching this in the new banking subject. So these things are now actually incorporated in there. But it's borrowed from our traditional actuarial work. So I quite like this slide because I developed it from first principles and I sat there, so I love it. You're going to see it a lot if you attend all my presentations. Even if I present on something else that's not banking, I'll try and bring it and see whether it's relevant. But anyway, this slide, we spoke about it earlier, which is the survey we undertook. Once again, instead of repeating it, I'll refer you to the IAA webpage of the Banking Working Group. There is a full report with full results of our survey that we undertook in 2017 and 2018, where we had some interesting results, with 73% of those people not in banking responding, saying they would consider moving into banking. And this was across 37 associations. This slide, I think we're just going to jump this slide because it's talking about there was no education for actuaries at all. People would just decide, let me move into a bank, and they use the skills they have. So some would struggle in terms of exams because they were not practicing the traditional work that was being examined. So we just included this slide for that purpose. and this slide as well. What drove us to promote banking is because the problems that we solve are similar, like I already indicated, and our actuarial skill set is already suited to banking, and there was lack of knowledge. Even though people had interest to acquire knowledge, they didn't know where to go. So we had to develop a banking subject so that we can cover the gap. And that's the subject introduced by the Actuarial Society of South Africa. What it covers effectively is exactly what you have in like your traditional subject, where you have to understand the market, you understand the products, you understand the regulatory aspects, which is the first section of that subject. Banking structure and banking marketplace in South Africa. Then bank risk management, it covers everything from credit risk, operational risk, to market risk, and the measurement of the risks, as well as how to manage those risks. Then you've got bank asset and liability management, which is quite an important aspect of managing a bank, where we have liquidity risk and funding risk management, and there is what we also call funds transfer pricing, which is quite an interesting concept but complicated, which is included under that section. We also have capital management, that is also included under that section. Then we have got bank strategy and governance is the last section. Like I indicated earlier, we needed to have an understanding of the bank's business model, their strategies, and the governance that is employed within a bank. That's about it. These slides, you can read them on your own. The reason we included them is because the banking subject, we developed it over, 1.5 years, and we started examining students in 2015. These are some of the questions, real exam questions that came. So I just included 2 slides. They cover different areas: retail banking strategy, then investment banking and structured finance, then group and central banking. And then if you move to the next slide, you've got changing regulatory environment, and you've got another real problem. That one is specific to South Africa, where there is talk of expropriation of land without compensation. And we brought a question and we asked, what is it going to do to the mortgage book or mortgage books of banks? So that's something for you who are students may be interested to go through and read. Now, so I think I'll end there, and if we have time, then let's just have a discussion. So let's have questions, let's have discussion, especially as it relates to the challenges, people who might be looking for work, who might want to move to banking, either qualified actuaries or students, what issues you are likely to face. Any question or anything that you want us to discuss, as long as we have got time. Because if there are no questions, we are very happy to call it a day. There are 1 and 2 questions here. Yeah, 1 question and then there's another question. Do we have a mic? Oh, okay. All right, so 1 question, so we start with you and then we come to the second question.
So considering the high NPAs in the India currently under the public sector banks, do we foresee any regulatory requirement which can come up, which requires actuarial involvement or any provisioning kind of thing? So can we see any regulatory involvement side?
Your question is, okay, let me answer it this way. It's kind of a political question because it's a question that's a real one and a practical one. I think we are going to move, that's me, okay? That's me, just my views. I think as more and more regulators start to understand the value of actuaries, we want to move to a stage where you actually have an actuarial function within a bank. You can ask actuaries who have gone to banks and seen the work and the management of some banks starting to see the value an actuary brings simply because of the training that's mixed. So I think we are likely to move there. Whether India is going to be the first one or is going to do it, I think that question I'm probably not the best placed. But I think if we have an actuarial function, in the same way we have other functions, finance functions and the like, within banks. And that's what I would drive for if I'm still alive. I don't know if it will happen during my lifetime, but that's what I would drive for. Someone told me it's overambitious, but we realized in South Africa it's actually not overambitious at all because the regulator fully understands the value of actuaries. They have worked closely with actuaries. It's a case of starting to push it. You are going to see an article in one of the actuarial magazines where we are going to be talking about possibility of an actuarial function. So it's actually a realistic question, but it's also a political question because there are a lot of things that need to be done, including convincing most of the senior actuaries, because there are actually senior actuaries in some of the major actuarial associations who don't believe actuaries should have been in banking at all. So there are a lot of things that we have to do. Okay, so I like that question. Thank you very much.
I think it's more of a chicken and egg. I think it's really so the profession has to really. I think this is the beginning that we made in terms of understanding what other markets have been doing in banking. There's a lot of work that has to go in terms of speaking to the government, speaking to RBI, talking to the bank association, etc., and create perhaps a space in that area for actuaries. To be honest, it's not straightforward. It's not very simple. And I think we really will have to work towards that. But I think it's more of creating the capacity and also then going to the user of the services that we do have the capacity. So both have to work in tandem. And, we can't really do one without the other. And therefore, we have to create the capability within the organization and also at the same time demand talking to all those employers and perhaps the regulator there in the banking industry.
I think you've just answered my question. What I was going to say was, is there anything particular in the different in the Indian banking system compared to the South African banking system, which would actually change the approach that our speaker has just been talking about? And I think you've answered that one.
Yeah.
So that question's gone. But then again, there was a point raised about having a specific actuarial function within a bank, possibly with the regulatory approval. If that idea was touted in Australia, I would be very strongly against it, because I don't see enough of a specific actuarial specialty that would require them inside a bank. I know that's most probably a heretical phrase here, but certainly certainly the skills of actuaries are necessary inside banks. But those skills do not require an actuarial education, and so I would hesitate to say that there would be a special position. There should be a special position from a regulatory perspective of an actuary inside a bank. It just to me seems a bit of overkill and a bit of special pleading. But I'll end that by saying I know nothing of why that might be a very good answer in the South African position, but certainly in Australia I would argue very strongly against it. But yeah, we're and thank you.
Okay, thank you. I think we have to really kind of create the capacity and demonstrate the value add that you could do the banking system without actually really getting a protection from the regulators to employ you. I think that's what we have to really approach. And that's what perhaps the South African market has done is, I don't think there's any regulatory requirement to hire actuaries in banking. So while we do not really have to go to the regulator from that perspective, but we have to really go to the regulator in terms of what value add do we have if you were to have actuaries in banking from the risk management perspective, or perhaps some of the other analysis that we spoke about, and also demonstrate to the employers of these bankers, how could actuaries add value in their risk management.
Okay. Now, thank you very much. I think, thanks. How much time do you have?
Unless we have any questions, we can just close the session because we can just start the next one. Any questions from the floor? It's the opportunity. I think we're lucky to have Mike here and a market which actually are doing a lot of work in the banking. Use this opportunity.
Okay, let's have another question. We will have a discussion outside this session on why it might come. It might take 2 decades, but I think it will come.
Mahi.
So we want to take some learning from South Africa. How were you able to actually move into the banking domain? Like, what should the student actuaries do to actually move into the banking domain? Because there's a lot of inert need in the Indian market that they say that they want to move into the banking sector. But a lot of our students do not know what should be they doing. Because neither the banks, when they actually send their application form, the banks do not know. Of course, we are saying that we are going to engage with the bankers. But I want to learn from the South African market. What were the challenges you faced in the early era and how did you overcome it? Both for the senior actuaries and for the younger actuaries as well.
Okay. I did answer that question briefly, but let's use the South African example. So it's not going to be as easy as, you just go and then you're recognized. It's not going to be as easy. It's historic. The banks already have other people in there. They are not actuaries. They may not even know or understand the value of actuaries. So there's actually a lot of work that needs to be done, both by individual actuaries as well as the Actuarial Association. For example, in South Africa, we now even have someone from the regulator sitting on the banking committee of Actuarial Society of South Africa. After, I think, 8 years of that committee being there, we now have one. We have got another person sitting from the Banking Association of South Africa, which is just an association representing banker. We now have them sitting on the banking committee. But how did it all start? It started with one bank, and that bank happened to have been structured, or let's rather say, started by actuaries. 2 actuaries in the 70s, the FNB I was talking about, 70s, 80s. One of the guys was an actuary. And he just believed in actuaries. So it was even a management issue. So they were just recruiting actuaries and placing them in different positions. When they did that, other banks, I think APSA, also were recruiting. And I'm talking about actuarial students who then rose through the ranks and were writing exams and then qualified. So you had another bank also starting to recruit actuaries. But there were not too many at that time. Then you had the big 4 consulting companies like PwC, Deloitte, KPMG, the usual suspects, recruiting actuaries who were working in, they called it non-life, but you had general insurance practice, and then they were also practicing actuaries. Because banks, instead of recruiting actuaries, some of them had to go out. But a fundamental change with Basel II. Basel II, firstly, we had Gil Marcus, who was the governor of the Reserve Bank and was given honorary fellow of Actuarial Society of South Africa. So understood, worked with actuaries. Then we also had Garth Griffin, who sat as a director on one of the biggest banks in the country. That was another push factor. Then we had Basel II being introduced. And the models had been developed by other people who were not actuaries. And the regulator specifically said, without having an actuarial function, said, we don't want these models to come if they have not been looked at by actuaries. So they were developed elsewhere by non-actuaries, and actuaries had to now validate and check those models. So I think it's a case of the work that has to be done for either the regulator or the banking executives themselves to understand the value an actuary can bring. So that happened. The challenges are always there. Right now, you actually find banks advertising, you have a degree either in finance or actuarial science, or it's now there on the list. It never used to be there. But there was a lot of work that happened over many years. So come back to India. There is going to be a lot of work that has to be done for the regulator to actually understand the value you can bring, but the banks themselves to understand the value you can bring. From there, I remember general insurance when we were growing up, it was not really recognized. There was no actuarial function. There was nothing. It's there now. Okay? The same thing is going to happen. I mean, we don't have crystal balls to tell, but the same thing, I believe, is going to happen because it has happened before. But there will be challenges. The students must get up. I said it earlier. They must go and look for work. They should not present themselves and say, I'm an actuary and end there. Because everywhere I walk around the world, if you say an actuary, it's always a problem. People do not understand what an actuary does, even the skills that underlies an actuary. So you're going to have to sell yourself a bit more on what you are able to do if you are a student. That's how I moved across. I said I'm an actuary, but don't worry about it. Let me explain what exactly I am capable of doing. So I had to explain. A lot of other people do the same thing. It will be slow penetration, but that's what you have to do. Okay, but let's take it outside. There is a lot we can talk, just experiences, why we now believe what we believe. Because we went through things, and with resistance and so forth, but people changed. Okay.
Thank you, Mike. I think thanks for sharing all your experiences. It's a journey, and then the profession is really striving to take the journey, understanding from other markets and see what we have to do in India to really progress in that particular area. Thank you very much for your presentation, Mike. And we can call this session an end to this session. There is going to be concurrent sessions in some of these halls. And I would like to announce that, I've been asked to announce that there is a musical evening, Bollywood musical evening in the same hall starting at 7 p.m. So after this concurrent session, please enjoy that. Thank you very much.